Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello and welcome to Business Line State of the Economy podcast. I am S Ronendra SIngh, and in this episode we are talking to K. Srikumar, Senior Vice President and Co-Group Head at ICRA Limited. He has extensive experience in evaluating the credit profile of companies across automotive and other retail sectors. The Indian automotive industry has seen an exponential growth in the festive season this year, and segments such as two-wheelers, which were seeing some tough time, have also shown growth in the domestic wholesales during this period. Srikumar will give us some perspective on the overall segments, including passenger vehicles, two-wheelers, commercial vehicles, and electric vehicles going forward in the next year. Welcome to Business Line podcast, Mr. Srikumar. Just to start with, we all know about the auto industry, how it has fared well in this year, and on top of that, the festive season also this year was one of the best. And in the month of November also, we have recorded highest ever numbers in the passenger vehicle segment. So I wanted to understand, to start with, how do you see the industry going forward, and especially in passenger vehicle sales? Do we see the sales momentum continuing in the coming months?
Thanks for having me on this podcast. I'll largely set the context over here when it comes to the automotive demand is concerned. So if I have to take back, say over the last 5 years to start with, the financial year 2019 was the year where we observed that, the vehicle sales were at record high levels. And this was visible quite across all the segments, namely your passenger vehicles, two-wheelers, as well as, commercial vehicles. As we all know, then we had COVID, which was, of course, a challenging phase for everyone. And many industries witnessed a sizable contraction in demand. Automotives also, had its share of, contraction, because the demand is largely dependent on the mobility-related factors. So certainly the impact of COVID on auto demand was significant as well. Why I want to give this background is that, while we observe a growth in the current years, but we would also like to see where we were. Have we actually breached the past record levels? To know where we exactly stand, we thought, maybe we will provide a perspective of, how things were in the past. So during this period of COVID as well, we observed few interesting trends. Not all segments were in a similar direction. For instance, commercial vehicle demand was, considerably affected because, as we know, truck sales are largely affected by any kind of movement in the economic activities. Whereas when it comes to the bus sales, there again, due to the work from home mode, the schools and the education institutions were closed. So obviously there was an impact. Two-wheelers at that point of time went down as well due to multiple factors, because mobility was restricted. The vehicle prices were rising due to regulations, etc. Interesting case to note is the passenger vehicle segment, wherein it was more a case of a supply constraint than the demand, which had affected the overall volumes. When I say supply constraints, it's more to do with the semiconductor related issues. Post-COVID, things normalized. People started moving. Economic activities, grew on a sustained note. And there were, good amount of preference for the personal mobility. So effectively post the multiple waves of COVID, there was a catch-up phase, we can call, of lost demand for nearly 2 years. But what is interesting to note is that, the demand trend continues to be strong. Some mixed signs are visible in selective segments. For example, just to set the context here, like I mentioned, FY19 was, if we have to call FY19 as a record high level of volumes, certain segments we saw getting breached in FY23 itself. For instance, passenger vehicle, which reported a sharp 27% volume growth last fiscal. Obviously, the factors like, the preference for personal mobility, income levels, all these continues to support. But importantly, the concern of semiconductor related issues were normalized. We also had multiple product launches. All these supported, the demand. Talking about commercial vehicles, if you have to dissect the subsegments, you have your medium and heavy commercial vehicles, light commercial vehicles, and the bus segment. The demand for M&HCV trucks obviously is inherently cyclical in nature. and largely tracks the growth in economy. So what we observed initially in FY23 was demand trend was favorable as economy did well because multiple activities on the infrastructure happened. The financing environment was also supportive. Still, it fell short of the past record high levels during this period. But we expect that this industry will see the new highs in the current year. So what we observed in passenger vehicles in FY23, largely we are expecting it to happen in the current year with regard to the breaching of the peak level of FY19. Interesting trends in CV, what we see is that the segment is also kind of structurally getting uplift by the factors like the age of the vehicles are kind of rising, so which necessitate relatively a faster replacement of vehicles, which will push CV volumes. Also, the regulatory landscape is also supportive, and the factors like the construction, mining activities, and the thrust on the infrastructure, all these are continuing to support the demand. We talk about the other segments, light commercial vehicles. On the other hand, we see obviously some headwinds in the current year, because this is one segment post-COVID recovered a bit fast because of the pickup in the e-commerce sales and all. So the base effect was there. And to some extent, we do see some contraction in the e-commerce transaction volumes in the current year. So all these are supporting, to some extent of contraction in the current year. Monsoons also played a role in selective pockets in the current year. The last segment within the CV, if we have to talk about, is a bus segment. There we see a major recovery. The resumption of schools, colleges, offices, all these on one side. And importantly, the new vehicle orders from the SRTUs are supporting. So in short, it's a mixed bag for CVs in the current year. Buses doing very well. Trucks are kind of holding up, and some challenges are seen for the LCVs. The final segment, if we talk about two-wheelers, this is one segment which hasn't reached that record 2019 levels, and we think it's still a year away. Effectively, what has happened post 2019, there were multiple headwinds for this segment. First, there was a change in insurance norms. Emission norm changes also happened, and with the transition to BS6. And in between, we had this commodity cost also, being on a higher side. And now we are in the second leg of BS6 change. So all this collectively resulted in a good, 30 to 40% rise in the vehicle prices. So considering the kind of customer profile we are looking at, this is a sizable jump for them to commit to a purchase. Rather, they have kind of postponed their vehicle purchases. Recent volumes, have been, quite good. The fact that, like you rightly mentioned, the festive seasons have been, quite well. But one needs to see the sustainable trend in this growth. For current year, we expect a kind of, mid-single digit growth for two-wheelers. When it comes to PVs, higher single-digit growth. And, commercial vehicles, kind of closer to mid-single digit growth is what we are effectively looking at. And, even prior to the festives, the run-up was actually quite decent. Two-wheelers did much better because of the fact that, there is an upcoming marriage season. And some recovery we have seen in the rural demand as well. So all these have supported two-wheeler volumes, but still export demand is something, it's still not the way it was at least, a year back. Passenger vehicles, again, this year during the festive period, we saw a moderate pace, around 6% or so, largely supported by the fact that, there were good amount of new model introductions and financing rates were decent. We expect the similar level of growth for the full year as well, so around 6 to 9%. During this period, technically, we can't call a festive driver for a CV. It's linked to multiple other factors. But we do expect, the fact that, there has been a sustained macroeconomic environment and infrastructure activity is remaining. So all these will support the recovery in the growth for the CV segment as well. So overall, the growth post-COVID has been pretty strong, quite stable in the current year. We expect the trend to kind of continue for the near to medium term.
All right, great to hear that. But if I have to dissect, Mr. Srikumar, let's start with the passenger vehicles. The demand has been much for the SUVs or MUVs, if you can say. But when it comes to sedans or small cars, the demand is not yet picked up. And, even the small cars, it's in fact, in the declining phase.
Compact and large UVs did quite well. There was a very strong growth in the last 2 years. The growing popularity, if we can call, for the SUVs is largely in line with the global trend that we see. Effectively, we are saying that SUVs have emerged as a vehicle of choice. On the new models as well, a large part of the new models are coming in the UV space only. So why this shift has happened, if one has to look back? Obviously, the shift in customer preferences has been quite visible when it comes to, say, higher ground clearance and also the wheelbase, because the driving quality is better, seating position is better, storage space is better. So all these are kind of supporting better demand for a UV segment. So close to around 60 odd percentage of the overall market is now there. We expect this trend to be broadly similar going forward. While there are some launches seen, or we are seeing that from the OEM, some entry vehicles are being looked at for a kind of recovery, but we don't expect that to happen, because at the end of the day, like two-wheelers, here also the vehicle prices have gone up so much due to regulations and multiple factors. From a customer mindset as well, if I have to pay so much, why not a much better vehicle rather than an entry segment? So even the first time buyers are kind of committing to a UV, if not a UV, but at least an compact SUV is what possibly they are looking at. So to answer you, we would expect this trend of segmentation to support the UV sales, going forward, for the simple reason that the models are also coming like that, and customer preferences are aligned accordingly.
What about for the small cars also? Small cars, in the sense, in the rural areas, they were doing pretty well. So is it one of the reasons that the rural demand hasn't come back for the small cars? They are also preferring into UVs or the compact SUVs now.
Yeah, so this segment is across the market. We are able to see this. We dissected the UV segment mix across rural and urban, and the growth is kind of equal in both these pockets. So some new models are kind of coming in this space. One will also have to look at how the emergence of multiple powertrains are actually happening. Say, for instance, petrol of course remains a fuel of choice because of stricter emission norms, and the price gap between petrol and diesel is coming down. CNG is gaining preference as well, and more importantly, the demand for EVs are increasing in the recent times, given the government's push as well. Path towards EVs, of course, the hybrids. So from a customer mindset, the spend is increasing, be it rural or from a urban standpoint. The availability of choices within the the UV space is much better. So accordingly, they are likely to kind of dominate the overall mix.
So in the sedan segment also, do we see the trend? The sales impacted because of the SUVs demand, because companies like Volkswagen, Skoda, and even Honda is more dependent on the sedans.
Like I said, smaller vehicles may not grow faster. Sedans will continue to grow at a possibly the same pace. What we are trying to say is that the UV growth will be much higher, considering that it's close to around 60%. The growth in UVs will be outpacing that of the other segments. Sedans will continue to outpace the growth of the smaller cars, but it may underperform compared to the growth of the UVs.
Okay, one factor is also there that micro SUVs are also becoming a trend now after Tata and Hyundai. So do we see more launches in the next 1 year in that segment also?
Rightly put, that is also happening. It's about the categorization at the end of the day. So from a mindset standpoint as well, moving to the next level of categories is actually playing out. So launches are seen across segments, including the micro SUVs.
And on the two-wheeler side also, I mean, the demand was very low, pretty low from the rural side in the last 1 year or so. And do you see that also continuing in the future? And I mean, in urban areas, of course, the demand is more towards the higher end or mid segment. But the lower level of 100 or 125 cc segment, do we see the market returning or market coming back to the similar demand that we had earlier?
Sure. So, two-wheelers, like I was initially referring to, the factors which were constraining the growth over here was largely led by the price-related factors. The insurance cost went up initially due to the change in norms, and also the regulatory-related ABS needs, the emission norms. All these led to a significant increase in the total cost of ownership for the customers. So, in hindsight, post-COVID, when it comes to personal mobility, preference for personal mobility, one could have expected that the two-wheelers could have done much better. But the fact that the price rise has been pretty substantial, close to 40-odd%, 35-40%. So we see that, the income levels of the people have not gone up to that extent, at least from the segment of population which would normally look for, graduating to the two-wheelers. Premium vehicles were preferred to a large extent by people who could afford. The postponement in purchases was the factor that we see when it comes to the two-wheelers. This is a trend that we see across segments. Motorcycle, more specifically, here it's a large influence of the rural segment. So, the demand recovery was kind of slow, at least in the 75 to 110 cc. The higher displacement segment, if we talk about 150 plus, there was some blip there again because of the supply related challenges of semiconductors related aspects. But after that, there has been a double-digit growth in the recent quarters consistently, and premium segment is also kind of growing. On the growth expectations, if I have to say, triggers for a growth, like the factors supporting the demand growth remains, structurally favorable. But to some extent of uncertainty is there at what pace it could go, because the urban demand is favorable environmentally. The financing environment also looks favorable. To some extent, if at all there is a downside to any El Nino kind of a thing on rural cash flows, that could possibly pull down the growth. Medium term, the factors like say improving income levels, per capita income, urbanization, the general supportive factors will continue to support the growth in two-wheelers. Long term, if one still have to see, the penetration is still low compared to general market. We are the largest in terms of production, but the penetration levels are still low compared to the global market. So with the increase in the per capita income and also shift in mix hold of the household income profile, etc., the long-term demand outlook remains quite stable for the two-wheeler segments.
Do we see that because of the better policies for the electric two-wheelers, electric scooters, impacting the internal combustion scooters in the market?
When we talk within the electrification overall segments, two-wheelers obviously dominate. Whether that is affecting the growth of the ICE is partly correct, partly incorrect, for the simple reason that there is its share of overall two-wheelers is still less. So it has if you have to talk about share of EVs, it's only 4.5% in FY23. So that is not a bigger impact. But going forward, we do expect a faster growth in the EV sales growth for two-wheelers. That per se is not technically affecting the demand, because at the end of the day, the overall growth we have to look at ICE plus EVs also is not significant. It wouldn't possibly breach the past record high levels. So partly yes, but partly the other factors that I spoke about, the general increase in the price levels of the vehicle, and also some timeline shift of committing to a purchase of a vehicle is what is actually seen as a reason for a relatively slower growth in the two-wheeler segment. Having said that, the recent festive season gives a good amount of hope for this industry. The growth has been pretty comfortable. The upcoming wedding season and also the factors like growth in economy, etc., all these should support a sustained growth in the two-wheelers.
Right. Talking about cost factors, Srikumar, one factor was that because of the higher interest rate, which has grown a lot over the last 2-3 years, that is also impacting the sales, because 80% of the sales are through financing. So do you think that is also playing a spoil spot in the overall demand?
Certainly, yeah, certainly especially in the two-wheeler space and the truck segment, I would say, for the simple reason that, vehicle prices have gone up on one side. The overall total cost of ownership, if you have to look at, which includes the insurance, finance cost, all these things, obviously has an impact. For a truck player, at the end of the day, it also depends on the health of the cash flows of the fleet operators. So any increase in the interest rate for them obviously will have a limited liquidity at their disposal for committing to fresh truck purchases. So that has obviously constrained the growth of the auto growth.
Okay. And one more thing I wanted to understand on the commercial vehicle side. I mean, especially in the, LCV, light commercial vehicle side, is that also the demand of the electric vehicles is it impacting the ICE version of the LCVs, especially in the logistics segment? Because with more of the electric three-wheelers coming in, the ICE versions of the small logistic vehicles are impacted because of that.
When it comes to the LCV segment, we have seen a relatively faster growth post-COVID due to the factors like more of work from home and online related transactions necessitated faster goods movement. So this pushed a good amount of volumes there. So the base kind of got up much faster than normal. Second thing, this is another segment like motorcycles, to some extent monsoons play a role. The fact that there has been some erratic and uneven kind of monsoons in selective pockets. Some catchment areas did get more than normal and somewhere uneven. So those also affected the cash flows of the players in the rural market, more specifically the goods movement dependent operators. So these have affected. Electrification is still low there as well, LCVs as well. We do see a faster penetration happening, in fact, after two-wheelers. We expect bus and LCVs to be growing at a relatively faster pace. So obviously there is a catch up there, but if we ask whether electrification is a reason why there is a demand degrowth or a constrained growth in the ICE version of LCVs, the answer is no. The impact would be minimal.
Do you think that battery or electric three-wheelers are impacting the traditional ICE versions of the three-wheelers?
When we talk about the E3-wheelers specifically, see, there has obviously been a very sharp growth when it comes to the three-wheelers is concerned. But the E3-wheeler market historically has been led by this e-rickshaw segment because of the fact that the upfront and the operating costs are relatively less. So this presents to some extent a convenient and rather an economical replacement for cycle rickshaw drivers. So if we talk more specific to the e-rickshaw part of the three-wheelers, yes, this is the story. But if we exclude the e-rickshaw, the penetration of EVs in the three-wheeler segment is also less. It was around 8% in last financial year. It is picking up gradually. We see that number to have gone up to around 15% by 7 to 8 months of this financial year. There is a growth. This segment is also growing. Overall, three-wheelers also is kind of gaining traction. It's a healthy trend, I would say, that both the segments are contributing to the growth.
All right. And lastly, coming back to electric passenger vehicles again, do we see more sales coming in from the fleet owners over the next 1 year? Because as a lot of green vehicles are in demand now, and a lot of fleet companies are buying, they have contracts with Tatas or Mahindras. Do we see that segment growing in the next 1 year?
So when it comes to electrification as a general concept, so of course supported by the government measures, etc., it picked up pace in the recent times. The government policies, both center and the state policies, have been good. But what has also been a possible hindrance for a faster adoption of EVs, is consumers' mindset, awareness, etc. But beyond that, is the absence of adequate charging stations. So if as a concept on the charging station, one has to invest. It's a relatively high capital intensive business, and there is still some amount of uncertainty around the EV prospects. So this has played a role in terms of pulling down the growth of the PV segment part of the EVs. New models are coming. Good opportunities are actually good options are being provided by the OEMs when it comes to the PV part. They are also cautious. The market leader is cautious when it comes to the EV part of the PVs as such. The focus will be on identifying the charging infrastructure and the technology related aspects. So the in the larger scheme of things, PVs will catch up on the electrification the last, possibly the slowest when it comes to on a relative basis, when it comes to two-wheelers or buses. And we will see LCVs as well. After that only we will see possibly passenger vehicles picking up on the electrification pace. Within this subsegment, currently we see a large amount of trend happening in the consumer segment of PVs. The commercial segment of PVs, it's a matter of time that they also commit to a purchase. OEMs also would be mindful about whether to give it for commercial purpose per se to a large extent, because of the fact that the model will have to run for a fairly longer period of time. So this will play a role. So I would say that it would be a mixed growth for both the consumer and the commercial segments of the PVs. But EV growth within the auto industry for passenger vehicles will grow at a relatively slower pace.
All right. Thank you for your time, and thank you for joining us in this podcast. Thank you so much.
Thank you for having me.